Hello, fellow investors. This is the Dividend Uncle, and today's episode is a pivotal one. We've been riding the waves of the market together, and if you've been following my advice, you're likely sitting on a strategic pile of REITs. Now, let's delve into why the recent surge in REITs might just be the beginning of a significant opportunity. Welcome to the REIT revolution. Before we embark on this revelation, Tiger Brokers have good news for you. Use my exclusive link in the description to sign up for a new account, and you may win up to $888 in shares. On top of that, you can get $30 Apple fractional shares, plus $30 Tesla fractional shares, if you deposit 1,500 Singapore dollars after opening your account. So if you are looking to start investing in Singapore, Hong Kong or US shares in 2024, and don't want to pay any commission at all, sign up with Tiger Brokers today. Now, let's dive right in. The interest rate rollercoaster. Over the past 2 years, the REIT landscape has been navigating a rollercoaster of challenges, primarily the shadow of interest rate increases. Many skeptics doubted the resilience of REITs in the face of rising rates. However, those who've been tuning into the Dividend Uncle know better. We've been discussing the importance of pivoting to REITs before the clear signals of rate cuts on this channel, and guess what? The signals are here. Central bank strategic pause. Breaking news from the financial frontier. The Federal Reserve has not only held interest rates steady but has sent shockwaves through the economic landscape. According to the latest economic projections, the historic tightening of U.S. monetary policy that kept us on the edge for the past 2 years is officially at an end. Brace yourselves, my fellow investors, because the era of lower borrowing costs is knocking on our doors, and it's not a distant future, it's 2024. This unexpected dovish stance from the Fed caught many off guard, and the markets responded with exuberance. Plunging Treasury yields took center stage, propelling the S&P 500 to a staggering 1.4% gain on Wednesday. To put it into perspective, this is the most significant surge on a day when the Fed issues its monetary policy statement since July 2022. As if that's not enough, the benchmark U.S. 10-year Treasury yield, that seesaws inversely to bond prices, is now dancing around 3.96%, a level we haven't seen since late July, far lower than the 5% we saw just a few months ago. And guess who's reaping the benefits? You got it, REITs. This week alone, we've witnessed a remarkable uptick in REIT values, validating our anticipation. REITs in the spotlight in 2024. Now, let's dive deep into what this strategic pause from central banks means for our beloved REITs. Remember the CSOP IEDGS REIT Leaders ETF? Well, brace yourselves for the impact. Since the low point in late October, it has surged not by 10%, but an impressive 17%, signaling a swift recovery. But here's the crucial question: is this the climax, or are we just tuning into the overture? Consider this. The recent surge in the ETF might be just the tip of the iceberg. The world's central banks are orchestrating an economic symphony, and REITs have taken center stage in this composition. The pause in interest rate hikes is not just a breather, it's an overture to a potential REITs renaissance. But, why the emphasis on REITs? They're not just a random choice, they are intricately tied to interest rates. The dovish turn in monetary policy is like a gust of wind beneath the wings of REITs. As interest rates stabilize and potentially decrease, the cost of borrowing for REITs becomes more attractive, unlocking new avenues for growth and stability. These unique instruments, known for their dividend yields and stability, are poised for a resurgence. The brave new opportunity. Now, if you're wondering whether you've missed the boat with the recent 17% surge, let me put your worries to rest. This might just be the prelude to a broader REITs revival. Remember, in the world of investing, it's not about what you've missed, it's about what lies ahead. The current surge is a testament to the resilience and potential of REITs in a changing economic landscape. So, to those who've been hesitating on the sidelines, it's not too late. In fact, it might be the perfect moment to consider allocating or even increasing your exposure to REITs in your investment portfolio. The dynamics are shifting, and for those who are brave enough to seize the opportunity, the potential rewards are promising. This is not just a surge, it's a signal, a call to the astute investors who recognize that the interplay of interest rates and REITs is the melody of opportunity. Stay tuned, and let the REITs overture play on. In conclusion, the REIT revolution is well underway. If you've been with the Dividend Uncle, you've anticipated this moment. If not, don't fret. It's not too late. The window of opportunity is wide open, and the journey into the heart of the REIT market is just beginning. Stay tuned, stay informed, and remember, the dividends of courage are often the most rewarding. Happy investing!